Well, that's what we're going to talk about in today's video. But the one thing I want you guys to not get confused about is you're going to start hearing things, or a lot of things, about the 30-year Treasury. So when you start hearing rates on the 30-year in the 4.75 or 5% range, I want you to understand what you're looking at. It's not mortgage rates, it's actually Treasury bills. So we got this and a lot more to discuss in today's video to explain why and what's going on with these things over here. So my name is Dan Frio. I actually do this report 2 times a day. I do the opening bell and the closing bell to advise you guys what's going on over here. We do a stock talk every once in a while where I explain to you guys how the stock market works and some investments that I'm in. But first, I want to let you guys know who I am and what I do. So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. That's why I do this report every day. So if you're out there looking for some assistance, if you're looking to buy or refinance, I'd love to be able to help you, because our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how in the world can we do that? I'll give you all my information at the end of this video. And we also have a brand new website that I want to show you as well. So without further ado, let's get to these things over here and the reasons why you're here. So the first thing I want to go over with you guys is right through here. There's a lot of things coming out right now. The market's really never talked about the 30-year Treasury for a long time. I think it was kind of paused for a while because they always used to focus on the 10-year Treasury. But now you're starting to hear a lot of things about the 30-year Treasury bill. So, or the 30-year Treasury, it's a bond that the Federal Reserve basically has or sells, or the government sells, but that isn't the 30-year mortgage rate, folks. So I just want you to be cognizant. If you start seeing the 30-year Treasury and you start hearing that, don't think it's mortgage rates, because the 30-year Treasury right now is just below 5%. When you're talking mortgage rates, the 30-year mortgage rate is almost at 7%. So be careful which one of these things you're looking at. So that's what I want to first come across with you guys. There are Treasury yields, and then there are mortgage yields. So be careful when you start looking at the 30-year Treasury or the 30-year yields,